Hello everyone. Today we will be talking an important topic. I will be talking in detail the triple calendar strategy. I will be talking how to choose the strike prices, what are the entry and exits, what should be a good profit goals, in what scenario you should take this strategy, and also one bonus knowledge I will like to share with you guys. On YouTube, I was researching a lot about calendar. I found good information. However, I felt there is some more one piece for this to make the best strategy for your consistent weekly income. So I will share this bonus research which I have done, and I'm sure it will help you guys also. So please stick around till end of the video. Also, as I promised in my last video, I will be sharing with you the recent trade which I took on 28th of January. What were my strike prices and what are my goals from this. So please subscribe to my channel if you like content like this. Also like this video to promote it on YouTube algorithm. Also please follow me on Instagram. I will put the link to my Instagram account in the description. And those who haven't checked my last video where I showed how triple calendar perform in all the market scenarios when market goes up or goes down or moves sideways, how triple calendar can give you consistent 10% profit every week, so you can make 520% in a year, which is 6 times your money. So please check out that video as well. I have put the link, you can see on top of your screen. So let's start this video. So on 28th of January 2022, I took this triple calendar strategy. SPY was moving around 430 to $440. At the time when I took this trade, SPY was around 434. So I picked at the money 430 put calendar spread. Now to take care of the upward or downward move if SPY can take in the following weeks, I also bought 455 and 410 strike prices. So how did I choose these strike prices? As you all know, currently we are in very volatile situation. Stock market is going very fast in very volatile manner. Let's say if it would have been a normal situation, let's say we on 1st of November, you can see this doji, we were at 460 strike, around 460, SPY was at 460. So in that if it would have been a normal situation like this, usually what I do, I buy one at the money which is 460 put calendar spread, and to take care of the upward move I go 15 points up based on the delta and the current the price of SPY. 15 is a good point to take, so 460 plus 15 will be 475. So I will be putting my top calendar at 475 strike price, and for the downward movement I will pick 20 points far, so from 460 I will go to 440. The reason that the top one is just 15 points and the lower one is little more far, which is 20 points, is as you can see when we go up we go slowly, but when we fall down the SPY goes very fast. You can see these candles. So to give extra room for the down movement I have picked 20 points down. So in for 460 I will be picking 440, and also I also check some support and resistance if I have, so I will pick according. So you can see here around 440 I will be getting very good. Here you can see there's a support, so there's good chance if it falls it will bounce back from 4 here from 445. So 440 is a good range. This was the normal scenario. Now in volatile situation like this, I give extra room. So when I took this tape, when we were at 435, SPY was at 435. So instead of 15 points in like what I do in normal scenario, here I give 20 points because first we are oversold. So there's good chances we can go up with a very high velocity. So I don't want that SPY overshoot my upper this calendar strike price. So I have given 5 point extra and I have chosen 455 as my upper calendar strike price. Lower side, I have taken same 20 points like how I do in the normal scenario. The reason being, first we are oversold, and also at 410 I see there are a lot of supports here. So there are good chances if we reach 410 there will be some bounce. So that's why I have chosen 410, 430 and 455 as my strike prices. Out of these three, 430 and 410 I have put taken as put calendar, and 455 is my call calendar. Although you can pick anything, it doesn't matter. But why I choose 430 and 410 for put calendar is since they will be out of the money, so the probability that it will get sign will be less. So that's why 430 and 410 will be out of money puts, so that's why I choose put calendar here. And 455 will be a out of money call, so I do call calendar here. Now these were the strike prices. Now let's discuss what dates do I choose. So as you know, in a calendar spread we take two dates. One is nearby date, which is when we saw the day which we sell the option, and there is a one more farther option date which where we buy it. So let's say I am entering in any trade in the week of 24th of January to 28th of January. If I am entering in a trade between these dates, the dates I will pick will be 11th of February. So basically 2 weeks far I will pick. So I will be selling call or put of 11th of February, and I will be buying 18th of February. Basically 7 days far call or put I will be buying. Now my entry usually will be Wednesday, Thursday or Friday. How I pick these days I will discuss later part of the video. I do track all the prices in one Excel sheet, and I do a lot of research what is a good time to enter. So usually I take enter into a trade on Wednesday, Thursday and Friday. For this trade which I took on 28th of January, it was a Friday, I entered on this date. Now my exit conditions will be, first, whenever my profit is 10%, I will exit the trade. If it happens in 1 day or 4 days, whatever day it takes, I will exit. But I will wait maximum till next Monday, which is 7th of February. The reason being, I don't go till expiry. So expiry will be on 11th of February. I don't go till expiry. The reason being, the last week will be very volatile for my calendar prices. So that's why I exit the trade mm, by 4th of February or max to max 7th of February. Sometimes what I do is I sell 50% of my investment by on 4th, 3rd or 4th February, and rest 50 on 7th. So if you whenever you reach 10% profit, exit the trade. If you're not able to reach, then try to exit by 4th and 7th of February. You might like to cut your loss by that time. Usually, like many most of the times I exit the trade by 10 per taking 10% profit. But if I happen to take loss, it usually comes out to be 10 or 20%. It doesn't go bad like 80%, not like that. This calendar spreads are very safe strategies, and when you make it a triple calendar, it becomes more safe. Now let me jump to the fidelity profit and loss graph which I got. So this is my calendar which I showed you, triple calendar. These are my three strike prices: 410, 430, 455. February 11th I'm selling the calls or puts, and February 18th I'm buying calls and puts. Now if SPY remains between 400 and 460, I will be profit. So this is a very big range, as you can see. One important point to note is, in this graph it has been assumed that the volatility doesn't change. And as we all know, calendar spread is a high vega strategy. As you can see here, delta, gamma, these are not big. Only theta and vega are very big. So it is very sensitive to volatility. Even a small change in volatility can change this graph very different much. So that's why whenever I see follow any other YouTube video, I see people show this graph. But since the volatility can impact this graph a lot, I think so one extra point we should take into account is we should research how this profit and loss statement, how this graph will change with volatility. For this purpose, I do lot of research and I track all these prices in a calendar in an Excel sheet. If you have would have seen my previous video, I have shown you that how I track my profit and loss day to day basis. I have entered this trade recently, so I will be tracking it and I will show you how this strategy performs. Let me show you one another sheet where I do all my research. Sorry, it is very busy. Don't worry if you are not able to understand most of it. I will make a dedicated video to explain you about all my research which I do before I enter into these calendars strategies. So if you want me to cover that video, please put it in the comments. If I will get a lot of comments, if everyone is interested, I will create a dedicated video to cover about my research which I do on calendars in these Excel sheets. Just to give you brief overview, what I do is I collect the price of the calendar at every strike price, like 5 points apart, and I am tracking down them since January 6th. So I took this trade on January 20th, but I'm tracking down since January 6th. So like on this 290 was the price, the calendar which I bought, this 389 calendar which I bought, the same calendar on January 24th was 290. So as I told you that like I could have entered into this trade anytime between 27th to 31st, correct? Sorry. Yeah, from 24 to 28. So on in January I could have entered this trade. So if I see on 24th, this calendar, this row number 120 is the price of this calendar. So on 24th of January it was 290. On 25th of January it went up to 441, the price of the whole triple calendar. On 26th January it became down to 321. So as you can see, 25th January was not a good day to enter into this trade because it was very highly expensive calendar that day. So like that I keep track. On January 27th it was 378. So as you can see, before I enter I keep track of these prices since a long time, and whenever it is cheap I enter into the trade. So this is how I keep track of the calendar prices which is going on. I am also keeping track of further calendars. So this is another calendar which I will be entering next week. There's another calendar which I will be entering next to next week. So I keep putting these number in advance for my future trades, and when I will be entering I will be referring to these numbers. So these are very detailed Excel sheet which I maintain. So you can see I'm maintaining a lot of these are all calendar spreads. So I do a lot of data processing, and I pick what is the good date, good time when these are cheap to enter, and then I enter into strategy, take these enter into any strategy. So if you guys want me to give you a detailed video covering how I keep track of these things, please comment below so I will create a dedicated video for this Excel sheet. Now, this trade I have entered on January 28th. I will keep you updated as we go forward and when I will be exiting. Also, please follow my Instagram when I will be exiting this trade. I will post it there. So, if you want to get recent updates about my trades, please subscribe to my channel and also follow my Instagram. And one disclaimer, this information is for your knowledge purpose only. Please do your own research before you enter into any trade. Thank you. See you in the next video.